Welcome to Finantax Clips, where we educate you on smart financial choices. Today, we're diving into an essential topic that can be a game changer for your wealth, protecting it from economic volatility and inflation. Now, you might be wondering, what exactly are economic volatility and inflation? Well, economic volatility refers to the rate at which the price of an asset increases or decreases for a set of returns. It's like a roller coaster ride, full of unpredictable highs and lows. On the other hand, inflation is the rate at which the general level of prices for goods and services is rising. It's like a slow leak in your tire, gradually deflating your purchasing power. Both are significant concerns when it comes to wealth protection, but fear not. We're here to guide you through this complex financial maze. Stay tuned as we explore 6 safer and lucrative assets to protect your wealth. First on our list is real estate. This asset is tangible and often appreciates in value. Real estate, a physical asset, is a cornerstone of wealth-building strategies. One of the primary reasons it's considered a safe and lucrative asset is because it's not as susceptible to short-term market fluctuations compared to other investment types. Its inherent value is in the land, the building, and its potential for use or development. Think about it this way: you've got a piece of land, a house, an apartment, or a commercial building. Regardless of what's happening in the stock market or the economy at large, that property maintains its utility. People need places to live and work. Hence, real estate often holds its value even during economic downturns. Additionally, real estate tends to appreciate over time. Sure, there might be periods of decline, but over the long haul, the value of properties generally goes up. Whether it's due to population growth, development in the area, or simply inflation, property owners often find their investments increasing in value. But the benefits of real estate don't stop at appreciation. Owning real estate can also provide a steady stream of income through rental returns. When you rent out a property, you're creating a consistent cash flow. As a landlord, you'll receive monthly rent from your tenants, which can serve as a stable income source. This can be particularly beneficial during times of economic uncertainty, as the rental income can help offset costs or supplement other income. Moreover, real estate can also offer tax advantages. Depending on the jurisdiction, property owners may be eligible for tax deductions on mortgage interest, property taxes, operating expenses, and depreciation, among others. In summary, the tangibility, appreciation potential, rental income, and tax benefits make real estate a solid choice for those looking to protect and grow their wealth. It's an asset that not only withstands economic volatility, but also provides a reliable and steady income stream, making it a great asset for wealth protection. Scene script. Second on our list are stocks. These represent ownership in a company and can provide significant returns. Considered as one of the oldest types of investments, stocks have long been a favorite of many investors. They're a slice of a company you own. When you purchase a stock, you are buying a small part of the company, making you a shareholder. As the company grows and flourishes, so does your investment. Now, isn't that a thrilling concept? But why are stocks often considered a safe and lucrative asset? There are several reasons. Firstly, stocks have the potential for high returns. Historically, stocks have outperformed many other investments over the long term. Secondly, they offer flexibility. There are thousands of stocks to choose from, across a wide range of sectors. This allows investors to diversify their portfolio and spread risk. And let's not forget about dividends. Some companies distribute a portion of their earnings to shareholders in the form of dividends. These can be a steady source of income, separate from the stock's price fluctuations. Moreover, stocks can provide capital gains. This is the profit you get when you sell a stock for more than you paid for it. It's like buying a painting, waiting for its value to increase, and then selling it at a profit. Only, with stocks, you're dealing with companies and not canvases. Of course, investing in stocks is not without risks. Prices can fluctuate due to a variety of factors, including economic indicators, company news, and market sentiment. But it's important to remember that volatility is a normal part of investing, and while stock prices may rise and fall in the short term, they have historically trended upwards over the long term. Investing in stocks is not just about making money. It's also about participating in the growth and success of businesses, economies, and societies. It's about being part of something bigger, something that can make a real difference. Despite market fluctuations, stocks have historically provided substantial returns over the long term. So, while it's essential to do your research and understand the risks, stocks can be a valuable addition to your wealth protection strategy. Third on our list are bonds. These are essentially loans to a company or government with a promise of repayment with interest. Now you might be wondering, why are bonds considered a safe and lucrative asset? Well, let's dive into that. Bonds, in the simplest terms, are a form of IOU. When you purchase a bond, you're lending money to the issuer, be it a corporation or a government entity. In return, the issuer agrees to pay you a specified rate of interest during the life of the bond and to repay the face value of the bond when it matures or comes due. One of the key benefits of owning bonds is the regular interest payments. Unlike stocks, which only provide a return if the share price increases, bonds pay interest regularly, typically every 6 months. This steady stream of income can be particularly appealing for those seeking a reliable return on their investment. Another significant advantage of bonds is capital preservation. When a bond matures, the issuer is obligated to return the face value of the bond to the investor. This means that unless the issuer defaults, bondholders can expect to receive the full amount of their initial investment back. This predictability makes bonds a popular choice for those looking to preserve their capital while still earning a return. It's also worth noting that bonds tend to be less volatile than stocks. While the value of a bond can fluctuate based on interest rates and the creditworthiness of the issuer, these changes are generally less drastic than the ups and downs of the stock market. This lower volatility can provide a measure of stability to an investment portfolio. But, like any investment, bonds aren't without risk. The main risks associated with bonds include interest rate risk, credit risk, and inflation risk. However, with careful selection and portfolio diversification, these risks can be managed. Bonds are a stable and predictable asset, making them a favorite among conservative investors. Whether you're new to investing or a seasoned pro, bonds can be a valuable component of a well-rounded investment portfolio. Fourth on our list is gold. This precious metal has been a store of value for centuries. But why is gold considered a safe and lucrative asset? Let's delve into the golden depths to find out. Picture this. You are in a world where currencies fluctuate like a seesaw, economies rise and fall, and inflation rears its ugly head. Amidst all these uncertainties, there is one constant: gold. Gold's intrinsic value has been recognized since ancient times, and it continues to hold its ground even today. Gold is a tangible asset. You can touch it, hold it, and store it. Unlike stocks or bonds, it does not rely on an issuer's promise to pay. This gives gold a level of security unmatched by many other assets. Gold also serves as a hedge against inflation. As the cost of living rises, so does the price of gold. This inverse relationship with inflation makes gold a valuable asset in any investor's portfolio. Remember, when your currency loses value, gold typically increases in value. This is the power of gold as an inflation hedge. And let's not forget about currency fluctuations. Gold is priced in US dollars on the international market. Therefore, when the dollar weakens, the price of gold typically goes up. This makes gold an effective buffer against currency risks. Moreover, gold is a universally accepted form of wealth. Its value is recognized around the globe, making it a liquid asset that can be converted into cash relatively easily, anywhere, anytime. Lastly, gold has shown remarkable resilience during economic downturns. When other assets tumble, gold often shines brighter. This makes it an attractive option for diversification, adding a layer of protection to your wealth. To sum it up, gold offers a combination of intrinsic value, inflation protection, currency risk mitigation, liquidity, and resilience. These features make it a safe and lucrative asset for wealth protection. Gold's enduring value makes it a solid asset for wealth protection. Fifth on our list are mutual funds. These are investment vehicles that pool money from many investors to purchase a diverse portfolio of assets. Think of mutual funds as a basket holding a variety of financial goodies, stocks, bonds, and other assets all bundled together. Now let's delve into why mutual funds are considered safe and lucrative. Firstly, mutual funds are a great way to achieve diversification. When you invest in a mutual fund, you're essentially buying shares of a large portfolio. This means your investment is spread across multiple assets, which can help reduce the risk. If one asset in the portfolio underperforms, it's likely to be balanced out by others that are doing well. So instead of putting all your eggs in one basket, you're spreading them out over a whole farm of opportunities. Secondly, mutual funds are managed by professionals. These are people with extensive experience and knowledge in the financial markets. They spend their time researching and analyzing market trends to make informed decisions about where to allocate funds. So, when you invest in a mutual fund, you're leveraging the expertise of these professionals. It's like having a personal financial advisor, but without the hefty fees. But like all investments, mutual funds are not without risks. The value of your investment can go down as well as up, depending on the performance of the assets within the fund. However, the diversified nature of mutual funds helps to mitigate this risk, making them a relatively safer option compared to investing directly in single stocks or bonds. In terms of returns, mutual funds can be quite lucrative. While the returns depend on the performance of the underlying assets, historically mutual funds have provided steady and significant returns over the long term. This makes them an attractive option for those looking to grow their wealth in a relatively safe manner. In conclusion, mutual funds provide a way to invest in a diversified portfolio managed by professionals. They can be a safe and potentially lucrative asset to include in your investment strategy. With their built-in diversification, mutual funds can provide a balance of risk and return. Last but not least, we have cryptocurrencies. These digital assets are becoming increasingly popular. But why, you may ask? Well, they offer a blend of safety and potentially high returns that's hard to ignore. Cryptocurrencies are digital or virtual currencies that use cryptography for security. This makes them nearly impossible to counterfeit, offering a level of security that's unmatched by traditional forms of money. But they're not just secure. They're also decentralized. This means they're not controlled by any government or central authority, which can make them resistant to inflation and political instability. Now, let's talk about the potential for high returns. Cryptocurrencies have seen some of the most impressive gains in recent history. Bitcoin, the first and most well-known cryptocurrency, has gone from being worth a few cents in 2009 to thousands of dollars today, creating numerous millionaires along the way. But it's not just Bitcoin. There are thousands of cryptocurrencies out there, each with their own unique features and potential for profit. From Ethereum's smart contracts to Ripple's fast transaction speeds, there's a cryptocurrency for almost every use case. However, it's important to note that cryptocurrencies are not without risks. Their prices can be highly volatile, and there's still a lot of uncertainty surrounding their future. But with the right strategy and a bit of luck, they can be a lucrative addition to your investment portfolio. Now you might be wondering, how do you get started with cryptocurrencies? Well, the first step is to do your research. Understand what cryptocurrencies are, how they work, and what factors influence their prices. Then you can choose a cryptocurrency exchange, create an account, and start buying and selling. In conclusion, cryptocurrencies are a unique asset class that offer a combination of high potential returns and security. They're a testament to the power of technology and its ability to disrupt traditional financial systems. Although volatile, cryptocurrencies offer a new avenue for wealth generation. So there you have it, 6 safer and lucrative assets to protect your wealth from economic volatility and inflation. We've navigated through the dynamic world of investments and explored 6 key assets, each with its unique characteristics and advantages. From the tangible security offered by real estate to the potential for exponential growth in the realm of cryptocurrencies, there's a wealth of opportunities out there for savvy investors. Real estate, as we've discussed, is a tangible asset that not only provides a roof over your head, but can also offer steady cash flow and capital appreciation. Stocks, on the other hand, offer a slice of ownership in a company, allowing you to partake in its success and growth. They can be volatile, yet they've historically provided solid long-term returns. Bonds offer a less risky path, providing a fixed income over time. They're a great asset to balance out the riskier parts of your portfolio. Gold, a classic safe haven, serves as a hedge against inflation and economic uncertainty. It's a timeless asset that has maintained its value throughout history. Mutual funds offer diversification, spreading your risk across a variety of securities. They're managed by professionals, taking the stress out of investing. And lastly, cryptocurrencies, the new kids on the block, bring with them the promise of high returns. They're volatile and speculative, but they offer a glimpse into the future of finance. But remember, no single asset is a silver bullet. The key to protecting your wealth lies in diversification. Spreading your investments across these different asset classes can help mitigate risk and smooth out returns over time. And of course, making informed decisions is crucial. Do your research, understand the risks involved, and consider seeking advice from financial professionals. Thank you for tuning in to Finantax Clips. If you found this video helpful, don't forget to subscribe, share, and like. Until next time, make smart financial choices.